and welcome everyone. Thank you very much for joining today's webinar. Today I'm joined by the brilliant Adam Morris from the MSP Finance team over here in sunny or not so sunny UK. Topic today we're going to be looking at is how to add over £100,000 or dollars, depending on your currency, annual profit without finding a single new client. So really it's going to be a deep dive into the sort of hidden revenue sources within the business that you may not be properly monitoring for, but also ways to optimize your chart of accounts and the way you report on your financials to give you better visibility into how your business is performing, and perhaps by understanding the reporting is to then look at how you can optimize the revenue. Adam, thank you very much for joining us. Do you want to give us a brief introduction?
Yeah, well, thank you, Ben, first of all. And thanks very much for having me on here. It's really appreciated. Yeah, looking forward to today. And hopefully we can help some of your clients on both sides of the pond. Is that right? We've got some US people on today as well.
Yeah, and I think we've also got a couple from Australia and New Zealand.
Oh wow!
Assuming,
okay.
I don't know if
let's
they
not
even
mention
use
the cricket then. Let's not mention the cricket, or else we're all going to fall out, aren't we? So.
I've taken over the screen share. So we're just having a little bit of a technical difficulty. So Adam's going to let me know when he needs me to progress the slides.
Go for it. Go for it.
Otherwise, the chat is open, the Q&A is open. If anyone's got any questions as we go along, please do feel free to interrupt. Just dump them in the chat or in the Q&A. I will try and stop Adam and insert the questions where they make sense. We've also got a couple of polls coming along. We'd really appreciate your input, help us understand a little bit more about kind of what questions need answering and how to progress. So without further ado, Adam, over to you.
Yeah, thanks very much, Ben. And please do ask some questions if there's something you're not clear on. And we'll do our best to answer them as we go through. Can I just check, Ben, just to be clear, how much time do we have?
We've got sort of just under an hour.
Okay.
Absolutely no problem finishing early if we manage to give everyone the US a little bit of their day back, or for us in the UK,
sure,
get on the sofa a bit earlier.
Sure. Okay. So yes, next slide, please, Ben. So just a little warm up, first of all, just to get everybody just thinking a little bit here. And if you've seen this before, then no cheating. But look, here's a question for you. What would you rather have? £20,000 or dollars today in your pocket, or be given a penny each day, or a penny today rather, and then that penny doubled each day for 31 days for a whole month? So here's it's a little poll question actually, Ben. Are we able to get that rigged up?
Oh,
so choose A. So choose A, or do you need to create a new one?
No, I don't think we've got a poll for this one.
Oh, okay, that's what I mean. So we can't do a poll on this.
No, we're only the four that we've got right. Specifically set up.
No worries. So so we can't hear. I wasn't quite sure how that would come through, so I thought we might have
in the chat. Rohin suggested 1p doubled.
1p doubled, so yeah.
Someone's done their maths.
Anybody else? Any takers out there? Anybody else want the 20,000 now? 20 million now?
Nope.
Okay. Well, we'll keep going, but let's go to the next slide, Ben. So there's a little table of what happens if you double your 1 penny each day, and at day 27 you're at 671,000. So quite a long way adrift. But with the power of compound interest, of course, it catches up extremely quickly right at the end there. And in fact, it's that last day, the 31st day where you end up doubling your money and you actually get 21 million. So only just over 20 million. So just
Does that though
look,
mean
just a
if
little.
it's only a 30-day month, or if it's February, actually
Yes,
you
yes,
should go
exactly.
for the
That's
20
why it's a
million?
31. That's why it's a 31-day month. 31-day month, Ben. Exactly. So the point is, some of these things are quite unintuitive, aren't they? The human mind isn't really designed necessarily to be good at understanding some of these things, and that sometimes can transfer into the mind of business owners. Especially if you've come through an engineering route or a sales route potentially. And so that's why Dan and myself set up MSP Finance Team, because this is about helping MSP business owners build better and more profitable businesses, or meet the goals they're looking to achieve by actually getting a firm command on the numbers. Understanding the implications of that, making sure you're getting accurate data, timely data, making good decisions based on that data to actually allow you to get your business to where you want to get it quicker. And my own personal stories, I had an MSP and I sold it just over 2 years ago. And indeed, it trundled along for several years and it was actually a good business. But it wasn't until we really started to understand how we were performing financially, really getting into the detail of the different products, services, margins, profitability, etc., that we really did spearhead that business on. Decision making was better, it was clearer, budgeting, cash flow, managing all aspects of the business from pricing through to engineers' salaries and what have you. So for me, it's just really critical, and I felt there's something missing. My own relationship with my own accountant was a good one, but in no way did he provide that a level of support and insight that I really could have done with. So that's what we're trying to do here. Next slide, please. So just very briefly, we split our services into five key areas. Our bookkeeping is our day-to-day service, which we call Clarity, and importantly, that comes with monthly management accounts because you can't make decisions unless you've got accurate data. We have our finance director as a service. We have our compliance and tax service, which is similar to what your current accountant is doing. We have an entry-level service, which we call Tutor, which is designed for those smaller organizations who just need a bit of hand-holding and a bit of support and training for the way they're currently managing their finances. And at the top of it is our strategic coaching program, which is myself and Dan, who look at all aspects of your business and help you to get to where you want to get to. Thanks, Ben. So a little bit about gross margin, first of all, before we get into ways that we can actually reveal money left on the table effectively, which is something that I'm really passionate about, because I think this is a problem that an awful lot of MSPs have out there. But we're just going to briefly do a little refresher on gross margin and make sure that we are measuring it in the right way, because if we're not, it's going to be a lot harder to understand what we're doing here. Next slide, please, Ben. So just a really quick refresher, just 3 little examples there of how you've got an increase in revenue from 1 million to 1,100 to 1,200, how the cost of goods, so the COGS, the cost of goods sold, stay the same, and our gross margin therefore increases in each of those examples, and it increases from 30% to 36% to 42%. And if we assume that our overheads stay the same, naturally that means that our profit then increases. And the key thing about gross margin is that you don't, if you keep your overheads the same, you don't have to increase your gross margin that much to make a huge impact to your profit bottom line. And so here we've been able to drive our profit from 100K right the way through to 300K. So we've trebled it just by adding 12% of gross margin. So that's the power of gross margin. And for me, it's probably the number one KPI you all need to be looking at. Okay, Ben. And when we're looking to measure this, a mistake that we often see is that, and this in my experience has been led by accountants actually that don't seem to understand how chart of accounts should be set up for MSPs. So it's not a criticism at all of MSP owners. I think it's more about the lack of advice they're getting from their accountants when they set their chart of accounts up first of all. But what we often see is that the labor for all the engineering and project services is classed in and amongst all the other labor overheads in overheads or sales, general and administration. And that's not where we want those costs. We need them directly up into the cost of goods sold so that we can get a true understanding of what our gross margin is, because those are direct costs. The labor for engineers, whether they're first line, third line consultants, project engineers, that is a direct cost for the revenue that is being brought in. So it's known as labor loaded gross margin, and it's a key thing that we all need to do. And the chart of accounts that you have just in front of you there is a simplified good start to structuring what a typical chart of accounts should probably look like. So we are splitting our revenue into non-recurring and recurring, and we're further splitting it into product and service. And then we're mirroring each of those buckets accordingly so that we can understand the margins across them. And of course, you would then want to subdivide them further into the relevant line items that you are selling for services and product. If you want to just go to the next slide, please, Ben. And so it's just a few sort of tips around that that often leads to a little bit of confusion. You can break your salary costs into further sub buckets if it's meaningful to do that. If you're a large enough MSP with separate professional services teams, etc. But if you're a smaller one, I don't think it makes sense to try and do it that way. You're probably best just keeping them all together. Account management sales is another area of debate often, or rather account management overheads is an area of debate, and whether they should go into a sales bucket or directly into cost of goods sold. And of course, that would affect your gross margin calculation. So we're advocates of treating it as a sales function and a sales role. So that's where we believe it should go, and I think that's aligned with other thought leadership in the industry. In some instances, it may make sense to break down a role's cost, salary cost, into two different areas. Typical area might be a service manager role, who is 50% a direct cost for the delivery, but also is 50% an account manager, in which case 50% of his salary would go into the sales bucket, and that can be significant. So for small organizations, it does make sense not to go over the top on this, but just to, if there's sort of that 50-50 type split, it does make sense to factor that in. And the last point I'm just making here is don't forget to factor in your labor costs, your cost of goods sold for your engineers, into your products. So, whatever it may, email hygiene, for example, what is the cost of labor for supporting and delivering that solution across your clients? And when you are selling that, are you making sure you're factoring all of that in? Because a lot of MSPs don't, and they think they're making perfectly good margins, when of course they're not, because they're not factoring in that overhead. Next slide, please, Ben. And the next slide, actually, because taking this further, one of the things I think it's very empowering to do is then to use gross margin as a key measurement or KPI, if you like, that effectively you can give to your service director or service manager or whoever it is that's heading up that team, to kind of own and be accountable for. And personally, this again was quite transformative for our own business, where by allowing that head of that department to kind of take control of that number, it really did empower him to make better decisions. So he could measure that gross margin. That would lead to the decisions around his costs, whether he could hire that next engineer or not, the degree to which he was picking up billing leakage and out of scope work, the time logging accuracy of his staff, of course, because it's vital to monitor and manage all of that. Setting the right expectations with your clients, how you bill for your projects, and setting expectations around all of that, so that you don't end up with some bad debts, and obviously reworking inefficiencies. So for me, I found it extremely helpful to give these measurements to your delivery teams, and let them be responsible for let them set the target, work with them on what that target should be, and let them fly. Let them get there, let them get to that target. Next slide, please, Ben. So we have a little tool here that we quite like to use as a starting point for helping MSP owners start to reveal and uncover money left on the table. And I think it's often the case that owners are always looking to get new clients on board, to increase their revenue and increase their profits. And of course that does need to happen. But there's an awful lot of growth that can be achieved with the current client base. And my view is that is often overlooked. It's often a mistake to overlook that and concentrate purely on net new clients. And so we just listed out here 6 areas that often fall foul by MSP owners, often missed, and sometimes it's worth just to sit back and review where you are on each of these, and look at what the potential lost opportunity cost is. So we've got a table here with 6 different areas, and we've got some example numbers plumbed in, and we're going to go through each of these one at a time. And what I would encourage you to do, if you're listening to this, is to work through this as well. We've got a few poll questions, but actually it'd be really interesting to see in the chat if this is spiking any revelation or any interest, really, because it's good to hear. It's good to hear what people are experiencing themselves. So if you can go on to the next slide, the first thing we're going to look at is just standard routine hardware installations, laptops, PCs, and the degree to which we are pricing this appropriately. Now, all of these numbers are going to vary, of course, depending on where you are in the world and where you are in each of those different countries. So this isn't about telling you what your price should be. The numbers I have here are, I think, focused for the UK, but obviously the US is going to be different, and Australia is going to be different, and parts of those places are going to be different as well. But in general, I think we're underestimating what our pricing should be, what our benchmark should be. So here we have an opportunity where we are pricing out a laptop installation. How many of these are we doing each month? What should we be pricing it at? And that's just a simple calculation. So we're suggesting in the UK it should be a minimum of £300 an installation. If you were charging 150 an installation and you were doing 10 a month, that would reveal £18,000 of annualized profit opportunity. I don't know if anybody out there has any suggestions on what they're currently charging, but often we are seeing people discounting this, you know, for various reasons, or you know, falling short on estimating how long this activity takes, and it all adds up. Number 2, please, Ben. Consumption billing true up. So this is very much in your house as well, isn't it, Ben? Around your software tools.
Yeah, it is to some extent. So I suspect a number of people on here will be using Zementum Connect, which is our tool that takes everything your vendors are charging you for and ensures that your PSA contracts or agreements, depending on which PSA's language you're talking, ensuring that all of the service quantities are up to date. So if Barracuda are charging you for 13 licenses for client 1 and 15 licenses for client 2, we ensure that those license counts are always correct and up to date within PSA, so that what you're billing and your financial processes are always correct.
And so this is very much aligned with that, but specifically is ensuring that you are picking up the new seats. So the seats that you have your RMM agents on, or don't have agents on, right, and should have an agent on. You know, how many of your clients are adding new staff, new seats each and every month, and are you picking up on them straight away for that month, or are you missing a few months? So again, a straightforward calculation here. What's your price per seat? How many net new seats are there, and roughly how many of those are you missing? So we've just plumbed some figures into that, and that comes up with £6,000. So, you know, that's on the basis of only 20 new monthly seats across all of your estate, all of your clients, and say you're missing 50% of those. That at an annual level, that's £6,000. Okay. Next slide, please, Matt. Thank you. So missed installs, moves, adds, and changes. Again, a very, very common one. So easy just to miss some of these out of scope pieces of billing. And it's only going to take 5 minutes, only going to take 10 minutes, or it just, you know, slips through the process, or it's a project by stealth. So this is about picking up those missed out of scope pieces of billing. And so in this scenario, we've got 50 clients. If we assume we're missing, say, half an hour a month for each client, we have an hourly rate of £85. That equals £25,500 on an annual level. So it mounts up very quickly. So we have just a little poll here, and the question is: I see we've got some respondents coming in already, but do you think you should have, or do you think you have a good process for catching all out of scope billing?
Yeah. So I've just closed off that poll. I think this one's really,
okay.
really telling one. Just sharing the results now. 100% of respondents do not have a good process for catching all IMAC billing.
Yeah.
What were you expecting?
Well, no, I guess that isn't a surprise.
Nabil's raised his hand. Nabil's raised his hand as well. I don't know if he wants to drop something in the chat or as a Q&A, or I can allow him to talk technically. I don't know if that's a really dangerous move. Nabil, do you want to just drop in the chat how you want to approach it?
Yeah, go for it.
And happy to let you ask live if you want to. Oh,
is he?
Put his hand down? No, he's put his hand down. I think it might have been a typo.
Okay.
Panic over.
Oh, okay. Okay, not to worry. Not to worry. But no, not a surprise. And it's not easy to do, is it? And to get it right, requires effort and focus and training and process. Training your engineers to pick up on this, revisiting it on a monthly basis, reviewing the number of tickets that are coming through, being missed, being picked up, working out what that increase in revenue is, feeding that background, and staying focused on it as an overall objective. And this example so go for it, Ben.
Yeah, I was going to say, so from my perspective here, I often see discussions on the sort of MSP social media and Facebook groups and stuff, where people want to really, really automate their billing process. And I think there's actually quite a lot of potential fallbacks there. I used to use Autotask in my MSP, and there is an option on an Autotask contract to automatically approve and post any labor on that contract. Now, I would never, ever, ever use that option. And any of my consulting clients know not to use that option, because it means if an engineer puts, engineers are inherently helpful. All of your service desk people want to help people. They just want to deliver the quickest result. They're generally not incentivized or otherwise interested in pushing for revenue generating activities. And so, if a customer calls in and says, "Oh, we've got this new starter, we bought them a new laptop at PC World or Walmart or whatever, can you help us set it up?" Engineer will just say, "Yes, absolutely. Install TeamViewer, I'll do it for you in half an hour." They'll then record that time on a ticket. They'll pop it on the normal support contract. If in Autotask you've got it set to automatically approve and post, guess what happens? That bit of work that should have been pulled out as an iMac because it's an install, just gets swallowed up on the contract and disappears.
Yep.
If, however, you have a process, either at the end of each week or the end of each month, to go through every goddamn time entry and approve it, you're going to catch those mistakes. And I would encourage people to always, sure, it cuts out a bit of the automation in your billing process, because you do have to spend an hour or two each month just going through the time entries line by line. But as well as catching the iMacs, there are other good things that you might catch. It's a good opportunity to see
100%. Yeah.
Whether the ticket
100%.
title is password reset, and actually someone spent 13 hours on a password reset or something. So you've got those scenarios you're going to catch, but then you've also got these iMacs that otherwise would just slip through. And so if I caught those, I'd change them.
I don't think there is a shortcut on this, because we are dealing with humans, and the implications are huge if we get this wrong. So yeah, for us, it was 2-3 hours each month for our service delivery manager. He didn't look forward to doing it, but every time we would always find something, and it helped with that ongoing process of improvement, right? You also want your clients to have the expectation that this is now being picked up, right? And if you ignore it, then you're not helping with that. It's vital, and it absolutely does all add up. And okay.
Annual
price increases.
Oh, so I'm going to start the poll. People can answer
the poll
while you explain what it all means.
Yeah.
Very excited by the polls.
So straightforward. Annual price increases. Very fundamental, very basic, but so many MSP owners are not doing this consistently each and every year, and it gets a bigger and bigger problem the more years that are missed, leading to some difficult conversations and some huge increases. So the best thing is just to make it a process, instigate it at the start of the relationship with the client, set the expectation with the client that it's going to happen. It's going to happen each and every year, and ensure that you're not falling behind, because over time, it will kill you. It will really, really hurt you. So in this example, we've got a £1 million annual service revenue, and there wasn't actually an increase in this particular example of 3%, but inflation was 10. So 7% difference, and that clearly is a huge amount that's being left there. So on the poll, do you apply inflation price increases every year for all clients? A, yes. B, no. And we're seeing a 60-40 split.
Yeah, I was going to say before I release the results on that one, I was just going to say I got quite a few thoughts on this in particular. If we go back 10 years where inflation was pretty much close to zero, having a clause in your contract, my contract had a clause that there was an automatic 5% increase in January or on contract renewal each year. Now, currently we're in a situation, or in the UK certainly, where inflation's running at something like 10.9%. So even though I had that inflationary clause, which worked 5-10 years ago, that wouldn't work anymore. If you look at what the big telecoms providers in the UK do, they all phrase it as the retail price index or the consumer price index plus a fixed percentage. So for my contracts, it should have been that the annual increase will be the consumer price index or inflation
CPI,
or some measure plus 5%. But then there's also an interesting point was, well, what happens if inflation goes negative? If inflation, very hypothetical, of course, but inflation was running at minus 10%, and I've got my clauses, inflation plus 5%, well, minus 10% plus 5%, am I going to drop my prices by 5% each year? Actually, that Vodafone, one of the big comms providers here in the UK, their clause is worded along the lines of the consumer price index plus 5%. In case that the consumer price index is negative, it will be treated as zero. So, I would encourage everyone immediately, literally tomorrow, to ensure that you have a clause in your contract. I think sharing the results here, 40% of you don't have any clause in your contract. So you want to be increasing year on year. You want it to be related to inflation. Don't think a fixed percentage on its own is enough, and consider the scenario that inflation might be negative, and therefore it should never be less than your fixed percentage increase. Hopefully that's all clear.
And really good point, Ben. From a legal perspective, that's not what we do, but that would be one of the fundamental clauses that you need to be really focused on. And you just want to make sure you are covered and have the flexibility to apply these increases on that. I think just relating them to CPI is probably the best way of doing it.
And if you're using something like Autotask, my process, rather than doing it in January each year, we did it on the contract's annual renewal. So there was a standard human process when they were going through the renew contract wizard in Autotask. Part of that process would be to increase that client's price by 5% across all of their services. So where you choose to do it, how you choose to do it, probably depends on the systems you're using. If you're using one of the big PSAs, ConnectWise or Autotask, it probably makes sense to do it at contract renewal. You might have a slightly more simple system that allows you to just do it flat across the board at the same time each year.
Yeah. I think the key thing is to be intentional about it. Not aim for perfection, but be intentional about it, and make sure you're looking across all of your clients.
We've got a
setting
question
that expectation.
We've got a question from Joseph here. How do you raise the price? Is it over the entire contract or just for MSP services specifically? I think that's actually a really good one, because
I think it is.
Microsoft 365, for example, you probably can't get away with applying around that kind of inflationary increase to Microsoft 365. For your managed services, 100%, no doubt, you should be raising those. Anything that you're not directly selling a product, I think where the product is part of your offering rather than a product you are buying to sell, I think you should be applying those increases. And I did say Microsoft 365 is something that you are buying it to sell, and therefore you kind of have to abide by their pricing, or you
Yeah,
just end
yeah.
up
So
kind of
it's
looking silly.
so certainly if it's a not a white label product or service, then you're basing that on the vendor pricing, I would argue. So if Microsoft put their price up, you put that price up, and of course that's out of your control, right? Those vendors can do that, however they want to, and ultimately you don't want to be wrapped up in an awkward conversations with clients where they think you're putting the price up all the time. So I think you do want to, demark those vendor that non-white label products in that way. For us, we for those products that weren't directly kind of wrapped up into our major service plans, we tended to separate those out. Again, because the vendors, it was vendor-based pricing primarily, plus our margins, and so most of the time our inflationary increases were based around our managed service plans. I don't know if that answers the question properly, but
Yeah, I think it does. Obviously, if there's any
okay.
follow-up to that question, feel free to dump it in Q&A or the chat.
Yeah,
Again,
yeah.
later.
I think the key thing is you don't want to be going back to your client every 3 months with another price increase. It's not going to look great.
Yes,
And
yes,
they're not going to understand the difference between, this product and that product. They're just going to see it as price increases every time you see them. So I think you do need to think it through, and have some clarity on that, and actually take your client through it as well. Standard hourly rate, straightforward, but how many MSPs are just undercharging, undervaluing what you do? So in actual fact, one of the things we don't talk about here is the actual managed service price itself, which is a whole discussion in its own right. But just basic hourly rate pricing, inflation. Some MSPs are still billing 65 an hour. It's leaving money on the table. So how often do you put your prices up? It makes a big difference. So in this example, we've got an hourly rate of 85, a current hourly rate of 85. We've got a benchmark hourly rate of 105, which we think is about right as an average in the UK. And then we've got non-inclusive labor revenue there for the last 12 months of 300,000, so projects, etc. What's the bottom line difference? 70,000. Okay. And last slide then. Hardware margins. So yeah,
we've got another poll. I'm going to put the poll out. People
we've got another poll.
While
Go for your poll,
explaining.
Ben. Which is, how do you apply margin for your hardware sales? So is it a cost? So is it mostly a cost plus approach, straightforward, the same for everything? Or B, is it more agile, case by case basis based on the opportunity, who the client is, the deal size, discounts from the vendor, etc., etc. Again, in this example, we can see that if your benchmark margin is goal is 20%, but you're currently hitting 15, and you're selling 300,000 a year, then that's 15,000 that you're missing out on. Quite significant. So I'm not sure there's necessarily an easy answer to this particular one. Selling hardware, making good margins can be very challenging. But it is something we need to think about. It's something we need to focus on, and not sell ourselves short on.
It feels like quite an obvious one to me, which is, I hate to say it, you should just be charging as much margin as you possibly get away with. And on but like, am I wrong? You know, we're talking between friends here. Am I wrong? And yeah, as long as you're not ripping off your customers, really, you should be charging the most margin you can get away with. If anything, any guidance across your business should really be, I think, a minimum margin. I don't really agree. I know at least one business I work with has a rule that they won't charge more than 20% margin, I think it is. Why not? Like,
Yeah,
if your cost price happens to be particularly low
mm,
and the
mm,
RRP happens to be particularly high, go
agreed.
and make a
Yeah.
70% margin.
And if you are very good at building relationships with vendors and getting discounts and buying in stock, buying stock or volume or whatever it may be, that allows you to get some of those larger margins, then go for it. There's probably other products that you're not going to win on. So I would agree with that. I think don't underestimate the value of your procurement service. How much time do you put into selecting the right hardware, making sure you're handling it end to end, you're handling that whole experience. You're dealing with dead on arrivals and all the niggles and problems, and you're having to work with the client all the way through that, keeping them informed of what's going on, dealing with all the logistics and everything else. So don't undervalue all of that. You've got to pay for that somehow. And so yeah, aim high, aim for a high service on that. Take away all the hassle and stress of all that for your client, and good clients should be happy to pay. Yeah, I think that's probably what I'd say about that. Okay. So what did the poll reveal on that, Ben?
I'll mute myself. So 75% have an agile approach.
Okay.
So doing this
Yeah.
case by case, which I think is
Sounds about
sensible.
right.
But
Yeah.
I guess the interesting question is, how do you maintain agility as the team scales? And I think for me, it's about setting a minimum margin expectation. Like, if we're reselling basic Dell hardware, if margin drops below, say, 15%, is it actually economically viable for us to supply that hardware, deal with the RMA returns warranty bullshit that comes with it, if our margin drops below a certain percentage? And so, yeah, I think you've sort of got to have rules around minimum margins.
I agree at that scale point, and you also need clarity for your team so that you can actually enact it and process it. And I guess ultimately, if you set that level at 15% for the sake of argument, and your client decides they can get it cheaper than themselves direct, then maybe that's the right way. Maybe that's the right way.
As long as you make it absolutely clear that when they buy stuff direct, you are not getting involved with the warranty returns. The amount of
100%.
my life I have sunk into dealing with warranty crap on consumer grade hardware that they've gone off and bought from the UK equivalent of Walmart.
Yep. And to fix the problems of the wrong operating system and wrong spec or whatever it may be is all billable, right? So that's not a support ticket. So yeah,
it's an
absolutely.
iMac.
It's an iMac, right? There you go. So look, we just run through 6 variables there, and there's going to be others. But look, here's 6 of the main ones, without even touching the pricing on an actual managed service tariff. And for this fictitious MSP, we've actually revealed 205,000 of unrealized EBIT-C or profit. And if the current profit was 200, that's actually 103% increase. So the numbers we pulled through there, they're not that extravagant. And interestingly, when we've run this for lots of other MSPs, it's always at least 100,000. Always. One figure sticks in my mind where it was nearly 500,000, but it's always over 100,000, which is why that's the number we use on the title of the deck. So for those MSP owners who are listening in on this today, I really encourage you to go back and work through some of these areas and see if there's some, actions you can take in the next week, month, to start to focus in on what some of this low-hanging fruit is. And rather than spending hundreds of thousands on sales and marketing plans to go off and try and get some really great profitable clients, what's the money that you're leaving on the table right now? Could actually that be a better use of your time? So we've got one more poll, I think, Ben. If we just go on to that
my turn to do something.
That next slide.
There we
Yeah,
go.
so
And
just be
launch.
interested to know the degree to which
Who spelled
going
that?
through this.
Oh,
Yeah, not me.
it wasn't me.
So,
I hadn't touched this deck.
No, okay. So yeah, that the missed gross margin opportunity was surprising, and we should focus more on getting our house in order. Or B, actually for us, missed gross margin was relatively small, and actually we should be focusing on net new clients and services.
I guess
So,
difficult one to answer until you've actually been through the full exercise.
Yeah.
But
agreed,
I know this stuff to me now sounds incredibly straightforward. But I remember when I was head in the sand trying to figure out how the hell do I get my clients paying more and grow my MSP. A lot of this stuff that seems quite basic, actually, you just overlook it. And you're right about going off chasing new clients and spending a ton on marketing and sales, when actually the incremental gains from just fixing these small bits of the gross margin can be quite significant.
Yeah. The point is, there's always something more important, right? There's always something else to do, isn't there? And actually, this is not necessarily the sexiest thing, maybe, that we should be spending our time on, but it is really, really important. So we can see
40% have said that the missed gross margin
Okay.
opportunity is surprising. And I would definitely put myself in that bracket. I think especially as you multiply things out over the year, even if you only found $1,000 or $2,000 a month worth of additional gross margin, multiply that by 12 and $24,000. I mean, what's that? A new Tesla or whatever? Like, relate that to what it's actually worth. And I think I always surprise myself, like just those small incremental gains. And small incremental gains, I think that whole term, if anyone's read Atomic Habits, James Clear, he did a keynote at, I think it was DatoCon last year, which was fantastic. And his entire methodology and mantra is about small incremental gains. And I think this is, one of those times where it's really important.
And the point on that being that, one small improvement a day is compounded, isn't it?
Taking it back to your penny.
Yeah. And so you've got 200 and whatever that is, 54 working days a year. I don't know exactly what it is, but if you're making one small improvement, if each person makes one small improvement in your team each day, then all those do compound, and you've got a terrific outcome, at the end of the year. So have we got any further questions or reflections, Ben, on anything?
I don't think so. There's no questions. There's nothing in the chat.
Okay.
So yeah, if anyone's got any questions, please do feel free to chime in with them.
Positioned quite nicely on time. We've got a few minutes left, I see. But yeah, so I've already mentioned this, but maybe go away, have a think how you're doing things at the moment, especially that 40% that think there's some missed opportunity here. Have a look at your chart of accounts as well, if that's not in the right shape that it needs to be. And if you just put onto that last slide, Ben, if you did want any help or assistance from myself, I'm very happy to help out.
And is this relevant to, I think a majority of our audience is typically US. Is this relevant to the US, or is this really just for the UK
It's a
audience?
good question. It's completely irrelevant. The numbers change, but the principles are exactly the same.
So happy to work with US clients.
Happy to work with our American and Australian friends, and see if we can eke out some opportunities there that we're missing, and give you a starting point for how you might go about actually actioning some of those things as well. So yeah, no, just drop me an email at adam@mspfinanceteam.com, and yeah, we'll schedule something in.
And then last thing to say, I guess, I mentioned earlier, Zementum is a revenue platform, helps MSPs to line up all of the revenue processes in their business, integrates with the PSA, so helps you with things like the sales pipeline management, but also a lot of this billing stuff, in particular, that bit about ensuring that the licenses your vendors are charging you for are always updated within the PSA. If you don't have access to that Zementum product, it's called Zementum Connect. Please do feel free to reach out to myself and I can connect you with someone on our sales team, or you can book a demo directly yourself via the Zementum website. Adam,
Sounds
thank you
good, Ben.
so much for joining us.
No, it's been a pleasure. I mean, I haven't seen much of you this week, have I? But
we've just been in rainy Glasgow together for the last couple of days at a brilliant event for the network group. Cool. Well, yeah, thanks everyone for joining. If there's anything either of us can do, our email addresses are on the screen. We look forward to connecting with you again in the future. Thanks,
yeah,
and
thanks very much, Ben. Cheers.
have a great rest of the day. Bye.